In our community, we talk a lot about the intercorrelation and interconnection between different charts. We saw in the main markets there was a lot of hype leading up to the Nvidia earnings release, and Nvidia didn't disappoint. As the center point or the central focus of the AI arms race, Nvidia is very well positioned. However, what we've seen recently are the markets selling off, and of course when the markets sell down, Bitcoin and total crypto market cap and all your beloved alts will follow. Smart money looks very deeply at market price action. It knows that all charts and all markets are intercorrelated and interconnected. When we look at inverse repo behavior, what we're actually seeing, these reverse repos, the inverted chart of those, actually tends to follow stock market performance. We've seen a bit of a boost up in liquidity inside the financial system. That is a good thing to see. Inside the US economic system, there is a re-acceleration of US economic growth. This is both good and bad. There's a growing consensus that interest rates remain higher for longer. As a community, we run the numbers, and what we've seen is a big percentage increase in the probability of a 25 basis point increase. It jumped from 12% just 24 hours ago to 20% right now. This has put fear back into the market. Also, the Nasdaq that was doing really well retraced. We have a bump up in yields and a decay of bond prices. Meanwhile, gold has been hit, Bitcoin has been hit, and the DXY is doing a bit of a rally. We know that crypto cannot escape the stock market's gravity, and as the S&P 500, the Nasdaq, came down, so too did Bitcoin. And when Bitcoin comes down, so too do the alts. We recently saw the S&P 500 just rallying up, but we know it's not about rallies. Price is always moving in a wave. It's about CTKS structure, specifically objective dynamic market structure, where smart money are buying and selling. So if we pop on our indicator, what this is actually informing us, there were huge degrees of smart money sell levels when the S&P powered through. It was just a matter of time before the sellers could push price down again, and that's what they've done. And the S&P 500, which has marked up since 1871 with the CTKS method, you can see that it closed out at 43.76. Fortunately, at 43.72, there is smart money buy support. We often see with these really big rallies, when they come into layer after layer after layer after layer of smart money sell resistance, they will get pushed down. We see this time and time again. And if you would like this indicator, you can find it at the ctksmethod.org. Contrary to public opinion, smart money does not buy at one level and does not sell at another level. They buy at multiple levels and sell at multiple levels as well. When we look at Apple's market structure, marked up with the CTKS method since 1980, we saw that Apple was entering an area of very steep smart money sell resistance from 178.16 to 183.50. It is very natural when price comes up to test these very, very strong sell areas to get a rejection in price. As we approach the release of our 1000th video, I've been taking a moment to reflect on this incredible journey we've been on together. 1000 videos, it's a number that seems so distant when I first started, but here we are. And it's not just about the videos, but the memories, the interactions, and the community that we've built together. I've seen all your well wishes and messages pouring in, and I'm genuinely overwhelmed. From the bottom of my heart and the bottom of Kate's heart, thank you so much. It's not just the words thank you that I want to convey, but a deep sense of gratitude. Each one of you, all 16,000 members, have been a part of this journey, making it richer, more meaningful. I've always believed in being genuine and authentic in everything I do, so please know that when I say thank you, it comes from a place of true appreciation and sincerity. Your support, your feedback and love have been the driving force behind every video. As we gear up for the 1000th video, I promise to continue delivering content that you'll love and value. Here's to many more milestones together. And it's also not too late if you want to share any comment or anything, a story, whatever you would like to share. Please reach out, and you can email or you can contact me by direct message on Twitter as well. I would love to include your story, your words, your thoughts. How you feel is really important to Kate and myself. Smart money knows that there are multiple resistance levels, multiple places inside the chart structure which stop price from going up, and also multiple safety nets underneath current price that capture price and rebound it. When we look at Tesla like this, it's very, very difficult to understand where smart money is buying and selling, especially if you were to mark up the chart since 2010. Let's pop on the indicator and let's see what smart money sees. With our X-ray vision inside the market, we saw when Tesla, back on the 21st of August, was just down here at approximately 230. We saw it jump through so many smart sell resistance levels. What does that mean? The sellers are inhabiting these spaces. They're going to push price down until it naturally gravitates through there with enough buying support. We can see that this 233 and also 233.56 level is very, very strong in terms of gravitational support. And that's another thing that smart money knows about. It knows the markets are gravitationally biased. One thing, when we look at these SLs, which are called Stanfield levels, price moves from SL to SL. If it jumps through it, it doesn't have enough time to actually consolidate a move and will typically sell down. If it manages to get above, it's going to the next one. Getting above this one, going to the next one. If it doesn't get above, it's coming back to the next one. If it doesn't obey this, it's going down to the next one, where it will get caught. If it's not going above, it's going below. If it goes above, it's going back. This is a very, very powerful way to look at price action, and you can apply this logic to any chart. Unless you know where smart money is buying and selling, you're effectively guessing. And when we look at Microsoft, which is marked up with the CTKS method, the world's most powerful smart money buy and sell level detection system since 1986, what do we notice? Where was the smart money hanging out? Between 329.11 up to 332.84. And there was smart money structural support at 321.57. We can see if it's going above, it's going to have a lot of trouble getting through all this smart money sell resistance. If it can't get above, where's it going? You got it. It's very simple. It's going below. And if it can't get above this one, it's going to the one below that. Fortunately, that's not too far away at 316.51. But if it does, it's coming back to 329.11. We looked at NVIDIA in the past couple of videos and we saw it had this action. But the key is, where is smart money buying and selling? When we pop on the NVIDIA indicator, which has been marked up with the world's most powerful smart money buy and sell level detection system, the CTKS method since 1999, we can see that this particular area, this very strong structural resistance at 473.47, it took time for the price to get above it. But the unfortunate thing for NVIDIA, if it's not going above, it's going below. But if it gets above, it's going to the next one. But it didn't make it. 503.30 was the area, the line we wanted to see NVIDIA cross. It didn't do so. That meant in all likelihood it was coming back to that strong structural buy area at 473.38. Of course, there are other strong structural buy areas underneath NVIDIA's price, and the prospects for NVIDIA are incredibly, well, they're outrageously good over the next at least 5 years. Smart money structure is so easy to comprehend when you have the simple rules. If it's going above, it's going to the next one. If it gets above that, it's going to the next one. If it gets above that, it's going to the next one. But if it doesn't make it, it's coming back to the previous one. You can imagine what a trauma it would be to look at Nvidia's price structure without those smart money levels. You would just simply be guessing. Markets are consistently changing their form, structure, and relationships between different charts. One of the things that we've noted recently with the Fed's intervention, it was always trying to bring supply and demand back into balance with each other to get rid of inflation, which became entrenched when the pandemic killed supply chains globally. As global growth is starting to re-emerge, what we're going to see is a different kind of environment. That means the cross-interrelationships and intercorrelations between charts will start to change. There's a massive difference between smart money, investors and traders, and retail investors and traders. Retail have their accounts wiped out, and that's very, very unfortunate. Smart money is completely different. They are very educated. They understand the tier 1 charts of the engine of financial markets globally. Keeping your eyes on these tier 1s is incredibly important. If you don't know where smart money is buying and selling, you're just guessing. And if you're guessing, you're gambling. And if you're gambling, the house always wins. For example, when smart money looks at silver, what it wants to know, where is the structure, where are the safety nets, and where are the ceilings below? We can see that there are a mass of smart money sell areas from approximately 2440 upwards, and we can see there's quite a few safety nets down here at 2411 and around that 2410 mark. What we've seen is silver's price try to get up to this smart money sell area and get pushed down. You'll notice it was pushed down and then pushed down more, found support, tried to rally but pushed down. This smart money sell area around that 2440 area is quite strong for silver. Without the smart money indicator, you just simply wouldn't know. You'd just be guessing. Smart money doesn't guess. We know the price is always moving in a wave. It's a nature of price action. Price action is going up in a bear market and comes down in a bull market. It always moves in waves. One thing that Nvidia's earnings release confirmed to smart money, the race is on for AI. At times like this, institutions really want retail out of the market so they can get a discount, and that's a very unfortunate thing. Often financial markets, well, pretty much always financial markets obey counterintuitive rules. If you're following common sense, you've probably witnessed so many times that you've bought at the top and sold at the bottom. Common sense doesn't work inside financial markets, and that's quite a shock to people. In fact, when professionals look at sector performance like this, they actually get quite excited. The red is their friend. News outlets always have a very sensationalistic story, and it's usually fear-based. I've been inside financial markets coming up to 4 decades, and one of the things that I can tell you, it's always bad news out there. Boom or bust just doesn't matter, it's just bad news. Why is that? Because it sells press. Following that news will likely turn you from an active participant to an observer, and you don't want to be an observer. You want to be knowledgeable. One thing that you will see time and time again, especially in the crypto market, have a look at Bitcoin and have a look at the decrease in total crypto market capitalization. They often run 1-to-1 or very nearly so. It's therefore critical to understand how Bitcoin is performing, and when we look at the past 24 hours top 100 gainers, we see Bone, Aave, Optimism, BNB, Render, XTC, Bitcoin Cash, GUSD and GMX as the top performers. The greatest losers past 24 hours top 100, Pepe, Sui, AKT, Rune, Conflux, Immutable X, Maker, Filecoin and Injective. There were $44.72 million worth of long liquidations in the past 24 hours, and 53.54 million in total liquidations. Nearly 20,000 traders were liquidated. If you're just getting into the markets, please don't leverage trade. You need to learn slowly, go slow to go fast. When you know what you're doing, you'll be in a much better position to keep whatever return that you actually get. As our community knows, you don't need to make big percentages to get big percentages. And that's what we're all about. We go long at spot, which means we own it. The crypto market is indeed fearful. We can see that there was a little bit of an uptick in optimism leading into Nvidia's earnings, but it's down a little bit now because the markets are coming down. One beautiful thing to always remember, the crypto market is an incredibly risk-on market. It is very highly risk sensitive. You can see that the crypto market started to go down before the main stock market started to go down. That was a bit of an indication that we may see negative price momentum inside the markets, inside the main markets. Many people have never looked at crypto in this manner. Every financial chart has a financial structure, and that can be revealed through the CTKS method. When we look at Bitcoin, marked up since 2009, let's just pop on the indicator. What do we see here? We can see that Bitcoin had some fairly stiff resistance up at this smart money sell area, 26,892, and just a little bit above 26,951. What we saw was Bitcoin rally up through one ceiling, another ceiling, gain strength, get through, but it didn't make it. And when it has a thing, what we refer to as negative air, that is a probabilistic move to the downside. Positive air is a probabilistic move to the upside. What we saw that it didn't hold its smart money buy area of 26,564, came down, found support, got negative air again, but positive air. Just couldn't get through this 26,564 area. What does that actually mean? If it's not going up, where's it going? It's going down to the next one. And if it keeps on going down, it would go down to the next one, which is probably a little hard to see, especially if you're on mobile, but it's at 25,762. There's another one down a little bit further as well, 25,349. If you want to see all of these levels, both up and down, just pop across to the CTKS method and you can grab this indicator for yourself. Better yet, you can learn the CTKS method and mark up the chart and get these levels by your own hand. One of the best smart money rules that you'll ever learn. These lines are called Stanfield levels or SLs. Price is always moving SL to SL. If it can't go above, it's going below. And if it goes above, it's going to the next one. If it moves below, it's going to the next one below. It's a very, very simple rule. You just need to know where the SLs are, or those Stanfield levels. As Stephen Mary Allen said, buying incrementally at lower SL levels is hard to do, but very profitable. Right is wrong and wrong is right. What are SME talking about? They're basically saying that financial markets are counterintuitive. If you want to get on the right side of the percentage, that means that you're acquiring when price is coming down because you know the structure. You're not guessing, you know what it is. And then what happens? You can sell that structure back into the market. You can make small percentage returns, way better than bank interest actually, but you'll find that those small percentage returns create incredibly huge gains. Knowing how charts intercorrelate and interconnect is really, really important. Here is total crypto market cap marked up with the CTKS method since 2014. We've just popped the indicator on to see where smart money is buying and selling. What we've seen here is something really interesting. I'm going to overlay Bitcoin's price action. When we overlay Bitcoin's price action, we can see directionally they're moving in the same directional correlation. And this is really important. All of your alts move in alignment with the movement of Bitcoin. If Bitcoin is going up, you've got a 99% probability that your beloved alt is going up as well. And hopefully a lot more percentage-wise than what Bitcoin is doing. The other side unfortunately holds true. If Bitcoin is coming down, your beloved alts are coming down, and they will bleed a lot more than Bitcoin. And this is a function of market capitalization. Bitcoin is huge. It takes a lot more money to push Bitcoin down by big percentages than it does to push alts down by big percentages. Literally, all the algorithms inside the crypto market look to Bitcoin and say, Bitcoin, what are you doing? I'll follow you. This is why we must know the smart money buy and sell levels on Bitcoin. It's incredibly important. If you're trading any specific alt and you don't know what the smart money buy and sell levels are on Bitcoin, you'll find that you're wrong-footed by the market all the time. You could see that Bitcoin was rallying through two areas of smart money sell resistance, came up to more of a barrage of smart money sell areas, had negative air, came back, decayed back to the first one, tried the second, decayed back to the first one, and potentially making its way down to that 25,755 mark. But it's not all over. One thing that you must just bear in mind, the stock market dictates crypto's future. This comes as a big shock to a lot of people. A lot of people just say, no, Ken, you're wrong. Crypto is completely independent. I wish it was, but it's not. Crypto is a risk class. Bonds are a risk class. Yields are a risk class. Stocks are a risk class. Everything is a risk class. They're all one animal. Of course, they have different underpinning ideals, definitely, but that's the case. That's why all charts are intercorrelated and interconnected. They just measure various forms of economic risk. And if you don't have risk, guess what? There is no return. And if you have a lot of risk, wow, fantastic, you can have a lot of return. But unfortunately, that can also go the opposite way. That's why we must know what we're doing in crypto. It makes it vital to understand the smart money buy and sell areas because you'll need those safety nets in crypto. You need them equally in the stock market, in commodities, in any particular area. Forex, you need them as well. But specifically inside crypto, you really need them. Ethereum is a very, very important crypto project, and we can see Ethereum moving very similarly to Bitcoin. And this is what happens with all alts. When we throw the structure, the smart money structure, on Ethereum, what did we see? Ethereum couldn't get past this smart money resistance level at 1701 and 20. It literally tapped it and it went back to the next smart money level around that 1676 level. If it's not going above, where's it going? You got it. It's so simple. It's going below. And if it goes below at a certain rate and pace, it's probably going to crunch through the first one and get caught on the second one, which was at 1644. Don't expect these to be hard barriers. They're gravitational areas. That means the price can spike below them, but they become gravitational by nature. If it's going above, where's it going to? You got it, the next one. And if it continues to go above, where's it going to? It's really simple. It's going to the next one. You just need to know where they are. Smart money investors and traders also know that a resistance line can be different in strength to another resistance level, and also supports can be different. Let's have a look at XRP and we'll go through that concept. Let's just pop on this indicator. What we can see, if you have a confluence of smart money buy areas, they act as an area that can rebound price up to the next SL. But when you get very thick and very clustered SLs, they act as gravitational wells. Now the issue is here, when you're below price, that's not so good because that acts as resistance. When you're above price, that acts as support. We must always have our three-dimensional risk management playing out. We just don't automatically assume if it's above, it's going to keep going, because we often see it come back and test and retest as well. Financial markets are counterintuitive by nature. A lot of people say something like this, oh, I wish I had bought XRP at this 50-50 level. That would have been so fantastic when they're observing price around this particular area. But the key is to understand Smart money is always leaning in at levels of structure when they see this kind of pattern. Unfortunately, retail runs for the hills. I wish it was different. I'm really trying to shed light on this big retail problem. People get terrified when it's red. They leave the market at exactly the time that they should be in the market. They're actually leaving it. And it's so sad to see. And I can't blame anyone. I remember decades and decades ago, yes, when I first started, I was exactly the same until I said, hey, hang on a sec, I keep on getting caught in the same traps. This game is rigged. I have to think differently. And that was the point where I started my smart money quest. And that was many decades ago. If you're here, you're already on your smart money quest. You're actually very different from retail. Retail wants to get caught up in hype. And the problem with hype is that people buy and they don't know how to sell. One key to walking the smart money track is to understand Rule 603, synchronization profits. What does this mean? It means that when you're in sync with the market, you will understand how all the different charts are intercorrelating and interconnecting. I think the best way to explain how returns are distributed inside financial markets, just think of the market as a big pooling device. If you are synchronized in with the market, you'll be paid by the market, otherwise you pay the market. That's about as simple and as complex as it gets. When you do your 3-dimension risk management every single day, you'll understand that you must account for 3 scenarios, not just one. A lot of people would have expected the markets to keep on rallying. When markets rally, it's very natural to get a pullback before another rally. What people tend to think, especially retail, prices must just keep on going up. It's like having a sunny day every single day of the year with no rain. You know that's not going to happen. It doesn't happen in real life, and it sure as heck doesn't happen inside financial markets as well. You must have a cyclical movement, an up and down wave. It will go green, and then it will go less green, and then red, and then less red, and then green, and then more green. That's just the way things go inside financial markets. Don't be scared away because it goes red. That's your time to get on the right side of the percentage. Each and every month, I put out a video on these 27 charts indicating where the potential price action can go from an up perspective, from a neutral perspective, and a down perspective. I take you through those levels through a video. You also get an indicator which you can pop on your TradingView. And if you don't have TradingView, you can get it free, and you can use a free version. Always seek to understand, first and foremost, these Tier 1 charts. They are definitely, without doubt, the engine of financial markets globally. You're like a mechanic. You really want to hear if that engine is humming along or it's spluttering somehow. If it's spluttering, you're going to take corrective action. You're going to get ready to fix it up. That means fix your position sizing and fix where you enter and where you exit. All investors become traders anytime they buy or sell. Investors don't stay in the market forever. Even the legendary Warren Buffett, he sells out. He just sold Blizzard. Naughty Warren. The key is to understand how all of the markets just intercorrelate and interconnect. It's a fascinating study. It becomes an obsession after a while, because when you look at things, you just say, wow, this is truly magical. Everything is intercorrelated and interconnected. I thought it was all separate. It's not. It all works together. And I would like to thank Purpuratum for his very kind generosity in offering a CTKS partial masterclass scholarship. If you're interested in learning from a premium Rolls-Royce level masterclass, which is all about 30 plus years of knowledge transfer, you can apply for the masterclass scholarship. The link is in the description of this video. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.